right. Hello and welcome. We are hanging out today with Jesse from Amboss in a very long overdue hang. We've been good friends. I'm going to say good friends for quite a while, actually. And most importantly, Jesse is actually he played in a Satoshi Nakamoto. It wasn't the best Nakamoto in Medellin, Colombia. He played a kink song, Strangers, probably one of my favorite kink songs. And I hope to get him back up there again. I've got him here today, so I'm pretty pumped about this. And there's probably like 47 people in the world that really understand Lightning. I am not one of them, but I'm lucky to know all 47 of them and be able to talk to them from time to time. And Jesse is definitely one of them. His company, Amboss, this is Jesse on X here. Cute, handsome man there. Boss, Amboss Tech, you got it. All right, so we got a lot that we're going to go through. I'm going to tease some of it here. We've got amboss.tech. We've got amboss.space. Dude, where's my node? You can find it there. We've got the new announcement from the other day. If you didn't hear about it, this is Bitcoin yield. This is non-custodial yield. That's right. And we are going to find out how the heck that works. We've got Magma, which has been around for a while. That's peer-to-peer Lightning channels, buy and sell. We have liquidity subscriptions. So when you're out to dinner and your payments start to fail, you don't have to run back home to call your wife to reset the node in the corner. And we're going to talk about this news that just dropped the other day with another one of our portfolio companies, Thea. They are offering Rails. So that's a little overview of what we're going to be hanging about. First off, Jesse, how are you and where are you?
Doing great, Muzz. I'm kicking off my digital nomad life, starting with Los Angeles. After being in Nashville and right by Bitcoin Park, it's time to go global. And we've got global money, so why not? Why not grace the world with our presence? So yeah, lots of conferences ahead. We're heading right into conference season, so overall doing great.
All right, cool. We'll definitely have to get you back on the stage for that Nakamoto again. All right, and maybe even in Riga. That's the rumor. I'm going to start the rumor. Jesse on stage in Riga. Come and find him. So, look, we have a lot of stuff to cover, and I'm trying to keep these short, but that's like really hard with something like this. I've been friends with Jesse for a long time. Worked with Amboss. Full disclosure, we are not an investor, but it goes to show you that even if you aren't an investor for whatever reason, which now I guess I have the envy, right? I wish I was, you can still be friends and work together on a number of things, which we definitely are. So first up, let's talk about what everyone is probably sliding into your DMs about and wanting to chat about. What is up with Rails? Can you give us an overview? How does this work? Is this a real thing? Are you the new BlockFi? What's going on?
Yeah, great tee up here. Okay, what we saw this year is everyone is starting a Bitcoin treasury company. That's like the big hot thing. But what was super frustrating to watch was none of the Bitcoin that is being accumulated in these Bitcoin treasury companies is making their way into supporting Bitcoin payments. And what we saw was a huge opportunity to just make it really simple to put your Bitcoin to work and to support Bitcoin payments. So really that's what Rails is all about. So how this works is we're doing this for self-custody. So if you can take self-custody, which most of the Bitcoin treasury companies can't, individuals can. And so that means we're spinning up a Lightning node for you as an individual, and you write down your 24-word seed phrase, and only you know it. And then you delegate limited permissions to Amboss to open and close channels, all the stuff that people don't want to do when they think about managing a Lightning node. And they just now we could put that Bitcoin to work, and it gives any of our customers of Rails access to all the yields that can be generated from running a Lightning node. So that means you're earning when there's payments that are routed, and you're earning when you're leasing liquidity. So if you were to make an analogy, like if you're a power company, you're making money with every electron that you sell, as well as you're making money when you're doing the power connection, when you're doing that power drop to the home or whatever end destination. That's like liquidity leasing is the power drop. That's where most of the money is made.
All right. Now, I remember, and again, not the expert here, the Boz score, right? It was named after him for what he was able to earn with routing payments. And it was really impressive then. It was like autistic level genius of how could somebody do this. And then it died out for a while, where it was very small. It was like maybe 1%, and you still had to be like really good to even get 1%. There really wasn't much that was the fad of yield for routing payments and managing a node and all the headaches and great things that come along with that. And then Square, Cash App Square, dropped that gnarly statistic in Vegas that I can't remember off the top of my head, but I want to say it was like maybe 9% or so. Do you have any insight on that? Is that fake news? Or how is that even possible? And is that just because they have 9 million people? Is that where it came from?
Yeah, I got tons of questions about this. And really, it comes down to the fact that there is so much withdrawal volume from Cash App. So, what's great about Cash App is customers are going on to Cash App, they're buying Bitcoin, and then they're withdrawing it to self-custody. And that withdrawal volume that is happening exclusively on Lightning, that's what gives Cash App the ability to actually sell what they're accumulating, which is this weird type of asset called inbound liquidity. And inbound liquidity has a market price. So the more withdrawal volume that they have, the more yield that they can generate, which is a little bit weird, but it's almost like they run a storage unit on their node, and they're renting out a whole bunch of swap space. So it's a little bit abstract, but overall, those yield numbers sound legit based on really their withdrawal volume. That's where that yield is coming from, and that swap space has a market price, which is basically, at the time that they reported it, about 0.6% of the withdrawal volume is what they could capture as yield. But outside of that, there is some alpha that folks can generate from Cash App knows where the withdrawals are actually going to. And with that information, you can actually get a lot more market insight on how do folks generate yield, what are the opportunities in the Lightning Network marketplace. Overall, those things together make it legit that you can actually earn 9.7% APY from running a Lightning node. Now, that's not what we're promising with Rails, but overall, when you're connecting, you are routing payments, you're leasing liquidity, which is really where the yield comes from.
So then before, if you wanted to earn some yield with your routing node, you were still at risk. And things can happen, right? And I know you got the watchtowers and all these other things, and then 2 weeks you got to wait and all of the things that can happen. But to take this now and in a non-custodial way, if an individual has one Bitcoin and you've managed their expectations for what they can expect, how do you use that liquidity in a non-custodial way to basically route payments? How does that work? And I'm talking about, so it can't be in like an unchained multi-sig, or, I mean, how is it non-custodial? How does that work?
Really, it's because Lightning Labs did this really smart thing early on where they created this thing called macaroons, which is something that Google came up with quite a while ago, but they applied it to Lightning nodes. And a macaroon at its core is a limited permission set. It's really just a subset of the permissions. So overall, you are the seed phrase holder, so you have God powers. Now, with those God powers, you can delegate small permissions to Amboss to say, hey, I'm not an expert on this, even though I have all the permissions, but you do these couple of things for me. You open channels, you close channels, and you receive Lightning for me, and you can set my fees. And Amboss, like, we're experts on Lightning. So overall, people delegate those permissions to us saying, I don't really want to deal with it. I can do it because I have the God level permissions or the admin macaroons. But really, you guys are the experts on which connections should I make? Where should I allocate my Bitcoin in the Lightning Network so it's useful? And what we're doing on our side is we're actually modeling how, like, where should I allocate Bitcoin to make payments really reliable on the Lightning Network. And the more payment success we have, the higher the payment reliability, the more fees that can be generated. We're just adding as much value as possible by taking the Bitcoin and putting in a new structure that's useful for payments.
So if somebody's sitting and wanting to do this with a Bitcoin and foundation devices at their house, okay, how does that work? What is that vehicle where it's going to sit and that person is going to retain the keys, because it's got to come out of the hardware device? It has to sit somewhere. So is that in combination with a partnership with another service provider? How does that happen?
Yeah. So I think there's like a lot of leveling up and as far as understanding. So really folks have to understand the risk. Okay, now I'm going to put my Bitcoin into a hot wallet. And we partnered with Thea recently to help us with that process, because they're already familiar with educating folks and being able to say, your Bitcoin is now being used for such and such purpose. And here, this such and such is earning Bitcoin yield in a Lightning native way, in a way that's supportive of Bitcoin. And so that was really behind the Thea partnership, because they're already experts on that front. Thea can help us onboard this new generation of Bitcoiners that are putting their Bitcoin to work. And really, as far as on the Rails side, we're creating their own Lightning node for them in partnership with Voltage to actually make it completely self-custody. So they have their own infrastructure. And as far as Amboss is concerned, they're generating a password. And with that password, they can do client-side encryption, keep their Bitcoin safe without giving away all of the permissions to it, just limited permission sets, so that Amboss can do what it's good at, Voltage can do what it's good at, and Thea can do what it's good at.
Do you still have access to those funds to spend freely on chain? And that's not something where like you would put one Bitcoin into this, or I'm saying one Bitcoin now because the Thea minimum is one Bitcoin. You're locking up that one Bitcoin for liquidity. It's not something where you would connect that sort of node to your Zeus wallet on your phone and still spend in and out of it. Once it's there, it's parked in the same way that it's there as Thea. But if you wanted to make, say, an on-chain transaction for 0.1 Bitcoin, is there a process to unlock it to be able to spend it freely? How does that work?
Yeah. And here it gets a little bit complex. So let's keep it simple. So some of the Bitcoin is parked on the side in on-chain funds, and those can be withdrawn immediately because you as the customer have all the permissions to do whatever you want with it. So you can withdraw at any time. Where it gets more complicated is when the Bitcoin is in Lightning channels. So it's actively being leased, or we made a proactive Lightning channel open. For a channel, all of them have to close in order for you to withdraw your funds at this point in the product development. And the channel closes, one, they do cost transaction fees. And then two, sometimes it could be a forced close, which is where it gets locked up for 2 weeks. But really, that's a protocol level restriction. It's not an Amboss restriction. So we're having to interface with not only the Bitcoin protocol, but also the Lightning protocol. And with that comes additional restrictions. If we want to level up the security, this 2-week lockup is really about keeping funds secure. And that allows additional time for other negotiations to be made with the Bitcoin protocol. To take it the next level, that's where we would want to look towards some new changes to Bitcoin, like covenants, because that would provide additional security. But at the end of the day, as a Rails customer, you are in control. You have all the permissions, and Amboss is really just helping you interface with that protocol so that you don't have to understand everything. So really, your Rails interface is deposit, withdraw on chain. You don't have to understand anything about Lightning.
Okay, I definitely want to get into the revenue and how that works. I know that Thea, it's $30 a month, plus, of course, the assets under management in their normal fee structure. But is there a sweet spot for the amount for a Rails customer? There's only so many Lightning payments that are at least happening right now. There's only so much. And is it like the more liquidity, the more competitive it gets with these sort of products, the lower the fees get? And let's just say that there's a Bitcoin treasury company. Let's say that the one Bitcoin from the individual who likes this product, they're going to see a certain percentage, but somebody that might have 21 or 30 Bitcoin, is there like a sweet spot for a cap on really what you can expect? Is it like you wouldn't want to put more than X? Or is there no limit to how that works?
It remains to be seen. As far as Lightning is concerned, as a protocol, the max channel size you can create is 21 million Bitcoin. So basically, there's no functional limit on the size of the Lightning channels. That said, like there's opportunities if you are a large capital allocator as well as high net worth individual with one Bitcoin. So you could think about it like in transportation network terms. So where is it good to build a road? Would you want to build a road to your house? Of course. You can look at it like the last mile problem in transportation, but there's also a whole market for highways to be built. And with the Bitcoin treasury companies, there's now a whole new market for building these world-class super highways that you can send massive payments across. Because right now, if you're looking at, can I buy a Lightning channel? And what size Lightning channels can I buy? And you'll notice that there's only 3 sellers that are available that can sell you a 1 BTC channel. And that's currently, if we're onboarding more and more Bitcoin treasury companies to Rails, that allows them to serve really large Lightning channels. And that means really large payments are happening over Lightning near instant anywhere in the world. And that's a huge unlock for applications like trading and arbitrage, or even interbank settlement, which are huge payments. And that can all happen on the Lightning Network. So we're tapping into this now because you don't have to be a Lightning expert. You don't have to be one of these basement dwelling node runners. Really, you could be a public treasury company and start allocating your Bitcoin on the Lightning Network, tapping into that. Or you can also be smaller, be the last mile, get connected to the rest of the world.
So how does the revenue work for Amboss? And is it a shared model? Is a percentage? Like with the Thea example, if you're paying $30 a month, even just thinking about 1%, right? Just keeping it very modest, that has to work for that to be, if you're doing it for yield, you need profit. So how exactly does that work from Amboss in terms of revenue? Is it like a SaaS monthly product? Is it we get X amount over X? Like, how does that work for you guys?
As far as like pricing goes, it's really paying for the Lightning node itself. So that's $30 a month. That's a straight pass on. These are our costs for running the node. And then beyond that, it's 0.6% assets under management is what we charge the customer. And at this point, it's not a profit share or a revenue share. Really, our customers are getting all of that revenue. And additionally, that 0.6% assets under management that we're charging is not actually our profit overall. Really, this goes towards connecting your node as much as possible. And that's making your Bitcoin as useful as possible. So really, this is a growth play for Amboss to really help bootstrap the Lightning Network, because once it's bootstrapped and that is the global payment rails, then Amboss has a lot more opportunities. So we have to do the strategic deployment in order to really build and bootstrap the market and align the incentives to make it a no-brainer for people to start integrating Lightning payments into their system. Because the last thing we want is to be stuck under the thumb of traditional payment processors that are charging us way too much and way too slow and are not innovating. Rails gives us the boost necessary to help accelerate that entire process.
So did you used to have a product like this maybe 18 months ago that you shelved or abandoned or put on the sideline? Or was this that and now it just evolved into this?
Let's see, Amboss has been a product machine. So like we made the Magma marketplace. That was one of the first products that we did after the Explorer itself. So Magma has been just a manual interaction, but now Rails is the automated interaction with this marketplace.
I guess that's a good segue because we could sit here and talk about Bitcoin yield forever and we got to keep it moving. But okay, so Magma, buying and selling channels. This has been around for a while that you've been doing this.
It's 4 years old now.
It's similar to the Loop product by Lightning Labs, right? In a way, you're like monetizing the inbound liquidity. Is that right? Except you're just buying the channel outright.
Yeah, it's one way to look at it because Magma actually solves two problems. And Liquidity subscriptions is the automated version of buying channels on Magma, which is our more recent product. But overall, it solves two problems. One, can I receive payments? And then two, the second problem it solves is, am I well connected to the network? Because if you can have the internet and it can be a super fast, amazing thing, but if you are still using a dial-up connection to connect to it, you're not going to have a great experience using the internet. You want a broadband connection, and Magma actually allows you to buy a channel, get a good beefy connection to the rest of the Lightning Network, because that's where the Internet of Finance is happening.
Okay, can you walk me through this sort of marketplace right here? This available liquidity, it's almost a quarter of a Bitcoin. What is this APR minimum?
So depending on these different sellers, they're actually selling based on the size of the channel that you're buying. So the most you could buy from HODL Me Tight is 0.3 BTC, or actually 0.249 BTC. And so if you're going to buy that maximum size, the actual rate that you would pay is 1.19% APR. So this is really about a timed allocation of their Bitcoin to you, which helps you receive payments. And so overall, you're paying on an annualized rate for that Bitcoin to be allocated to you.
So do you find that these rates are competitive with what you can make on the payment side as far as the routing node?
Generally, no. I think if you're routing payments, it's going to be less than 1% generally that you would be earning. But on the leasing, what we saw historically is people are paying 2 to 5% is what people are paying for these leases. And then the takeaway earnings from that are 1 to 4% APY historically. It's what we've seen on coming out of Magma.
So first off, this is fascinating, but the question is anyone using it? What kind of demand do you have for Magma? This is such a cool product. You could do like nothing else in life except sit at home and play with your Start 9. You would have to quit your job and your wife would probably leave you and whatever. But in order to really maximize this, it's absolutely fascinating. Are people using it?
So what we've seen is Speed Wallet is taking off because they managed to sell Steak and Shake on receiving Bitcoin payments. And it's all happening over the Lightning Network. So all that's needed is a business like that to actually reach out, a Bitcoin business to go and actually sell this and incorporate it into their merchant point of sale system, because that is a huge unlock, because now Speed Wallet is doing over $1 million in volume per month, just supplying Steak and Shake. So that's huge. But now Speed Wallet has an operational problem because they're going to need to actually manage all of their liquidity. Now, who do they want to have doing that job? And it doesn't make sense for them to dedicate a whole bunch of engineers because the margins are too small. So what I would tell them is really you want to start automating this. And so this is where you would do a liquidity subscription, because a business like that, most people are not going to look at this marketplace. They just want the payments to work. So all this beautiful marketplace that we love to play with in our basements, like overall, it's going to go into the background. Our Bitcoin payments are just going to work because people are signing up for liquidity subscriptions, which automatically and intelligently purchases from this network.
Okay.
Overall, if you want to receive $100,000 a month, you're going to pay a $500 a month subscription. And that's going to be your payment processing cost. You're going to pay 0.5% to process your payments as opposed to 3 to 4% paying a Stripe or Visa or MasterCard.
Okay, so to close it out for the Magma channels, when someone needs that liquidity, it's not, are you looking at the score of that node? Does it matter?
It does. It matters a lot. Who are you buying from? We're not using the BOS score. That's long in the past. We're doing simulations of the entire Lightning Network to make sure that a payment from anywhere would be able to reach your node.
I guess I need to be a paid subscriber to view that. I'm just kidding.
You just log in with an email.
I know, I'm just kidding with you. But if these, let's just say that these were all priced the same. Okay. If they were all priced the same, the connectedness of
it matters.
It matters.
Yeah.
And that's what you would see on the next page.
So we spent over a year developing a machine learning model that optimizes which ones to purchase from. And that's what's behind liquidity subscriptions. We made this like ridiculously simple product. It says, I want to receive payments. Let me just pay someone to help me do this. And we trained a machine learning model just to optimize that. So I can take your $100 a month and actually intelligently purchase from the marketplace where anyone can start selling channels as long as you have a Lightning node and earning in your Bitcoin.
So when did you launch the liquidity subscriptions?
That was about 2 months ago, really. Start of June, we launched that.
And the primary customers would be someone like a Speed Wallet, or it would be someone like if Steak and Shake had their own BTC Pay server instance or whatever they had type of a deal.
It works across the spectrum. So if you're a small-time hobbyist, you're running a BTC Pay server and you want to sell some tchotchkes, you want to be crypto cloaks and start selling some 3D printed goods, you can use BTC Pay server with liquidity subscriptions, or all the way up to you are running a multinational exchange and you need liquidity to support your payments. You want to start tapping into high frequency trading and arbitrage using the Lightning Network. You can buy liquidity subscriptions to support that. It works across the scales. And we're just working in the background to make sure that you're getting the right liquidity that meets your needs, make sure that you're well connected to the Lightning Network.
So then when you think about all the other solutions that are out there, so every custodial wallet needs this, is basically what you're saying.
Yeah.
The wallet is Satoshi's of the world, Speed Wallet, Blink, okay? Anyone who doesn't want to do it themselves, they need this.
Yeah.
And everything that you do is LND.
Everything we do is LND, but the liquidity is cross-compatible. It doesn't matter what implementation you're running. Just opening the channels. Yeah.
Okay. I just didn't know if there was, I don't know what's going on with some of these sort of edge things, the nodeless stuff and the things like that. I just didn't know how that would play into it, or if LightSpark has some sort of solution that's competing with this. I really don't know much about LightSpark. or what they're rolling out. Cool, man. So have you had many takers with this?
Yeah, we've got a couple of trials going on right now with liquidity subscriptions. And really what we want to show is that automating all of this liquidity management is so much better than paying someone to try and do the circular rebalances. And it takes too much time, really, the manual Lightning management, when we could just automate this entire thing. Because the market is there. What we've shown with Rails is there's insane demand for getting yield on your Bitcoin. And now we can put that Bitcoin to work and make it work for you, for your business, to save you on payment processing costs, get you paid faster at lower cost.
Cool. So do you think there'll always be a place for Magma and the peer-to-peer channel marketplace?
Oh, for sure.
Leasing channels?
Yeah. I think that's the decentralized future. I think people have been talking about like the Lightning Network is going to evolve to be this hub and spoke model where there's a few very wealthy nodes that are deploying capital, but like, why should it just be a few? If we're actually going to make a decentralized finance system, which Lightning Network is by far the most decentralized layer of Bitcoin, like basically anyone can run. This is how we scale to the globe. And there's going to be pockets of capital, sure. But if we lower the barrier to entry to actually using Lightning, I think that's a win for everyone. We're using unstoppable money anywhere in the world, and the payments are going super fast at very low cost. I think the entire global economy is this dynamic system, and we need a dynamic marketplace to actually support that. And that's what Magma is. That's what liquidity subscriptions do. It's changing with the network.
Because I've known you for quite a while, and especially really during the last administration, you had all sorts of custodial regulatory kind of concerns and worries. And I don't know how you're feeling now, or how that's changed, or how any of that has anything to do with this. Because for a minute there, it was if you're routing payments on the Lightning Network, you're an unlicensed money transmitter. There was that whole scare. And there were many companies in our portfolio, very similar to yours, that were overly concerned with touching fiat or any of that. What's your stance on it now? I don't know if you had to get a legal opinion or does any of that play here, but what's the state of that?
Totally. I think our position for the longest time is that everyone should be able to use this technology, use this money. I think under the last administration, there was a massive chilling effect that was because of the policies and that policy by enforcement. It really killed things off for a while, and it really scared people. But overall, we built Reflex, which was this rules engine. And so really whatever rules that you have to comply with, especially if you're a business, you can just implement those as just operational rules. Like you don't have to dedicate a whole or do all these compliance hires because it's a huge expense for the financial industry. So we knew that this was going to be an issue, and we figured, why not build tools around this? Because if you're a Bitcoin business, you're probably under more scrutiny than a traditional business. And you want to have a really clean record of all your payments. And you want to be able to pass all these compliance checks, like either because you want to get a new license or you just want to avoid the questions altogether. So that's why we built Reflex. And it's more important now because people are less afraid to use the technology. And now they just want to protect themselves because politics is a pendulum and it swings both ways. So right now it's like we can do no wrong playing in Bitcoin, but as soon as that pendulum swings back, we really have to think about protecting our business, protecting our interests, protecting our investments. And that's what Reflex is all about, is implementing common sense rules that your business already has to comply with, and then giving you the documentation for it. Because at the end of the day, like we want to continue operating our business. We don't want to have a whole bunch of people asking questions and auditing our business if they think something fishy is going on.
So I actually remember when you were working on this, I had forgot but the joking that Amboss is going to be the chain analysis for the Lightning Network. And how is this going? And that's why I knew this was going to be a pretty in-depth chat that's long overdue, because there's so much stuff that you've built here. There's so much going on. How is this?
Overall, we've gotten more interest in this recently than ever before. Even when things are rosy in the Bitcoin space under the Trump administration, businesses are thinking about how to protect themselves. And Lightning is becoming more and more critical for them to scale, for them to deliver a good user experience. And so they need something from a dedicated Lightning company that actually understands this. When they go to some of the other blockchain analytics providers, they're like, these guys don't understand Lightning, because all of the blockchain analytics companies, they're focused on enforcement actions. Like, that's a win for those companies. What's a win for us is more businesses participating in the Lightning Network and feeling comfortable doing so. So that was what was behind Reflex. I think compliance overall is not the most popular thing to talk about in the Bitcoin space. But if you're a Lightning business, that is life or death. You have to have something in place that protects your business, because regulators are going to do what they're going to do, and they're going to try and poke holes in all the things that you're doing.
Lightning is more private, and some people are super private, but apparently not, because you're running OFAC checks. And if you took a company like Wallace Satoshi, maybe entering back here in the US, or anyone that wanted to operate here, right? Even a company like Zap or Geyser or whatever that wanted to employ these checks, it's just crazy that this information is even there to check. So if you bought $100 on Strike instantly and you sent it to your Speed wallet in one way or another, maybe they have an email address, but there was like not a KYC there, or your Phoenix. And then in one way or another, it ended up on markets, and then back into Kraken, and then back in the Trezor at home. There's nothing, it's impossible to hide, is basically what you're saying.
No, not at all. It's actually extremely private. There's no payment tracing on Lightning. The only thing that businesses are responsible for is don't pay terrorists, don't pay sanctioned countries. And that is something that's quite easy to check. And now you have a record to say, I looked at this, it passed all my checks that were like stupid, obvious checks that you should have been doing this whole time. Am I paying to a sanctioned country? Am I paying a recipient of ransomware funds? Am I paying to a recipient of terrorist funds? Like, overall, these are very common sense things. This is not about destroying privacy of the protocol, which is amazing. The most private technology that we have is cash, but we still have to be responsible of who we're paying. And really, this is just like common sense due diligence checks to say, who am I paying? Because that, at the end of the day, that's what you should be responsible for, not because I don't know, there's payments flying all over the place. I don't need to disrupt all the privacy to just meaningfully protect a business.
So let's talk about your basically flagship product. I remember when it was your only product, and this is how is this going? I remember when this was, I don't know, it was like a few dollars a month for node operators, and you had some tools in there. Has Amboss Space been the go-to mempool.space, or it used to be blockstream.info for Lightning? Is everyone going to Amboss?
Yeah, but what recently happened was Lightning Labs, the loop service, was just going crazy with volume, and no one really understood what was going on. They were calling them loop storms because there was so much volume that Lightning Labs was doing. And like, how are you supposed to figure out what's happening in the market? And the only resource that was available for that to really do the breakdowns was Amboss Space, where I could go to the loop node page and actually see what the fee rates were. What's the market for routing payments? So we built a ton of things into Amboss Space because really it feels like the homepage of the Lightning Network. And like, we're surfacing all the public data that is available to actually help make sense of this. And then we just had a ton of fun with all the data visualizations that you can do, all the historical data you can gather, because people want to know what's happening on the Lightning Network, who's using it, what types of payments are happening, what types of volumes, all of these things people want to know. A lot of that data is not public, but what we're taking what is public and arranging it so it makes some sense so people can actually make good decisions on the Lightning Network. And really, we started with this idea of communities, which has it's been by far the stickiest thing. Everybody wants to be part of PlebNet. Everyone wants to have that PlebNet tag. We even saw the folks at Kraken try and get the PlebNet tag on their node page, and they needed to get approvals from the plebs in PlebNet to actually get that tag, which was wild to see. But you can see LQWD, a publicly traded company, they have the PlebNet tag. So they got approved for this. They had to apply, and we got approvals. So overall, this entire time, people have been sharing around Amboss links, trying to get these tag approvals. And it was by far the most viral thing that we've ever done. And it was, I think, something that we did in like the first month that Amboss was a company.
This is the reputation system that it was built on.
Yeah, you got your peers validating the fact that you're one of the plebs, which is just huge. So there's like social validation, as well as if you really want to dive into the math and the graph theory of all of this, you can, and that all happens behind the scenes. So there you go. Kraken is part of PlebNet. It's also part of the Diamond Hands community and Lightning Netherlands.
Cool. How about the traction for this? Are you finding that in a custodial world or an ETF world that people use this less and less? And also, what's really cool about Jesse is he always has some really great Lightning Network statistics. Okay, good or bad, nodes, channels. How are things? Are people using Bitcoin? Is Lightning working?
Lightning's working. Of course, you can always go to our stats page and actually see the data itself. So you can actually see it in dollar terms or Satoshis. But overall, Lightning Network capacity has generally gone down in Bitcoin terms. But what's also happened is the Bitcoin price has gone up. So it's like the pipes got bigger, and we can actually have a more performant Lightning Network without the Bitcoin number even going up. It's just better at routing payments. So how much, like I often get asked how much Bitcoin is needed for the Lightning Network, like how much, and really it really matters just where you're putting that Bitcoin. So all of these statistics, we found that people were actually looking at the wrong thing. They really need to be looking at max flow. Is this network really good at what it does? Just you can look at the transportation system and you see the miles of road, but like you don't care. You don't care how many miles of road there is. You just want to care, can I get to my appointment on time? What time do I need to leave? So overall, you could buy a subscription, get access to more historical data to actually see how this has evolved over time. But there's so much to dive into. You could even see every single order that Magma has placed under the market metrics and order details. Like it's just a crazy amount of data that we've surfaced and made available for very low cost. So overall, we're Lightning Network nerds, and we want to surface this because there's such interesting stories to be told about the Lightning Network and about how it's evolving. And if this is the future financial system, like we want to be able to tell those stories and be able to dive deep into this. So we can even tell from this which days it's popular to buy a channel on the Magma marketplace.
So cool. Legend of Lightning.
Thanks so much, Maz.
All right, listen, we got to wrap it up. I don't want to, though. I could sit here and talk to you forever. But future of Amboss, what's going on?
So we've got this super popular product called Rails, and people are putting a ton of Bitcoin there. But what's next on the Lightning Network is Tether is issuing Tether USDT on the Lightning Network. So we have to be prepared for this.
Now,
So
now
yeah,
Jolts was our first deal with Thunder Funder, which
yeah,
was great. I was there in El Salvador. I think you were there too when they made that nice big announcement. What does this unlock for Amboss?
that means that you could deploy not only Bitcoin on the Lightning Network, but you could also deploy stablecoins and earn a return on investment with that. At least to access that market, because if someone wants to pay in USDT, they need liquidity in order for that like USDT to be received. So basically, I need some automated allocators of that stablecoin on the Lightning Network to be ready to go. And what we have is a bunch of automated Lightning nodes that are ready to provide that service. So really, these rails is really connecting people in whatever currency they want, using Taproot assets, getting it all connected to the broader Lightning Network for super reliable payments happening super fast at very low cost. And it's just going to be doing live exchanges. So every Rails customer basically becomes an exchange. This is a massive unlock. Tether is doing tons of volume. I think last year they did $10 trillion in USDT volume. And now that can happen on the Lightning Network at a lower cost for Tether, a lower cost for the networks, lower cost for the users. It's just better tech.
Wow, I want to be like you when I grow up.
Let's go, Mike.
Walk us through this last website here that I didn't touch on. So, what is this versus Amboss Space? Is this just an overview of the company? I see you have a bunch of fancy VCs down there. You don't have us, unfortunately, but maybe we can fix that in the future. What is this?
Amboss.tech is our company site, and this is where you can go to learn about all of our products. We covered so many of them today, but there's even more. And overall, just understand what the company is about. How do they make sense of all the stuff that Amboss is building? And really, that's what was behind this site. But you can also see our blog and learn more about the Lightning Network, all of the things that we do, as well as all the companies that we're supporting with our intelligent infrastructure.
Very cool. And sometimes Amboss releases really cool Lightning Network stats and reports and all that fun stuff too. Okay, this has been very educational and a lot of fun. And I'm really pumped for what you've built here. You've found product market fit. You managed to do it, and it's hard to do. I remember it in the beginning, and now it's like worlds different than where things were before. So congrats to you and to Tony. I look forward to seeing you in Riga, maybe Helsinki. We can get you on the stage for Rakamoto. And I also look forward to hopefully eventually being able to get an Amboss deal out to our awesome group. But thanks for hanging, and talk to you soon.
Sounds great, Mike. Thanks.